Does the current AI boom, in terms of like, when I say AI boom, the world of course perceives it as generative AI. But with the recent talks around AI infrastructure, AI models, does it really impact the way you see finance transformation?
How do you leverage AI to really kind of streamline that piece is one area. Risk management is a very critical area. Fraud detection and prevention is another very critical area. And a lot of the data resides in these documents, right?
Competition also gives us a lot of motivation to innovate. Uber was there, Ola was born, and so is a Rapido. So innovation doesn't stop and it keeps coming, and that's what makes life and the overall economy better. So
when it comes to small businesses, the general perception is that these businesses are risky, and hence banks would require collateral in the form of some sort of land, property, machinery for them to be comfortable giving any kind of credit to this small business, right? And many small businesses may have some collateral but may not have as much as is required to fulfill their needs.
hi, I'm your host Pamela from Bangalore, India, and you're tuned into season 2 of Transition Story. You're about to hear an enriching story driven by self-belief, passion, a lot of resilience, and personal growth. I'm so excited to welcome our next guest to the show. Hi, Pushkar. Good afternoon. How are you doing?
Good. How are you, Amila?
I am doing good, Pushkar. It's great to have you on the show. It's a privilege and an honor. I have been following trade finance solutions for a very long time, and this is a very desirable conversation for me. So, thank you for making the time to speak to me today.
No, most welcome and glad to be here.
So, before we get into all the fintech stuff, I really want to know what was that moment that you decided to walk away from your consulting career and risk everything and do what you're doing today? And that gives us an opportunity to also learn a little bit about, what you do today.
Sure. So I think I grew up in a family of doctors, but my father was actually has been an entrepreneur as well. Like he started his own hospital and has been kind of scaling it up. So that itch was always there. That eventually I wanted to start my own venture. And I spent a number of years in the US and decided to move back to India again with that mindset that eventually I would like to start my own venture. Before sort of moving back, I was in consulting, but then after moving back to India, I'd spent a couple of years in venture capital. And I think perhaps it was not like an exact moment, but it was something which was brewing in my mind that, I had to take the plunge at some point. And I think being in the venture capital industry, you do interact with a lot of founders. You're so close to startups. And I think somewhere I was also tired of sitting on the sidelines and really felt the itch at that point that, I think it was time for me to take the plunge. So that's kind of how it happened. Yeah.
Usually I have seen people taking the other path. They usually are entrepreneurs. They sell companies, make a ton of cash, and then they go into the investment route. You kind of took a very non conventional path. Is that because the family had entrepreneurship in the whole thing and you got inspired, which you said you kind of did, but not doing a job was like a desirable thing for you to start with?
Yeah, I think I as sort of operating as a venture capitalist for a couple of years, I think I also felt that you're a better investor if you've been an operator. And personally, I mean, there are some people who love investing as a career, as a job. I don't think I had that mindset. I don't think investing is my passion, and when operating a venture was far more appealing. But I think I'm more attracted towards being in the driver's seat, being in an operating role, and I guess that.
So, was it a little bit like being at the right place at the right time for you? Because you said you were in the US for a couple of years, the Y Combinator boom and the whole investing boom, demo days, and you were part of all of that, and that kind of gave you the right platform. Had you been in a different place or a different era, would the outcomes be similar? Do you reflect on this?
I wouldn't completely think that it was right place, right time because to be honest, I mean, if I think about like the initial period, it was a lot of iteration, lot of pivoting, and it took us a while before we actually started doing what we do. And a lot of these things kind of happened along the way, like when we had a business idea which we were experimenting with or trying out for about a year, and we'd moved through some iterations, and we're happy to talk more about that. But I think we applied to YC. In fact, I was in India At that time, YC would still accept Indian founders, and I think it's now reduced. So I ended up moving back to the Bay Area to go through YC. So it wasn't like I was actually living in the Bay Area and kind of closer to the startup ecosystem. I was actually based in India by then anyway. So it was less right place, right time. Actually, I think we in fact had to go through that initial grind to get to the point where it was the right business perhaps, and which we felt passionately about, and been scaling it up since then. Yeah.
Given that you have shuttled between India and US, where the startup culture kind of took birth, right? The whole hustling culture came from there.
Yeah.
Do you see a contrast between the startup culture in US and in India, having lived both sides?
So for sure, although things are evolving quite rapidly in India as well, but at least back in 2015, 16, the time frame when we started, I think the early stage venture ecosystem or the seed stage ecosystem was very vibrant in the US, right? I mean, at that point, the number of investors who were angel investing, the number of seed funds who were operating were like exponentially higher than, the same ecosystem in India at that time, right? And so that does make it easier because, I mean, before you even get to your Series A and Series B, what you really need is that initial set of investors who are, willing to take a bet on literally an idea and a team, right? And given the nature of our business, which was to some extent capital intensive, given that we were operating a trade financing platform, capital raising, became all the more critical, right? So that, of course, is evolving. I think if back in the day, we were one of the first companies to actually venture into trade finance and really leverage technology and data to address this problem. And I don't think there was a comparable at that time, right? And I think if you go back like 8, 10 years, a lot of the ecosystem in India were always looking for comparables in the US or China. So if you're trying to build a cab app, like it would be like, okay, what's an equivalent in the US or China? But when you're doing something new, definitely I think the kind of appetite for US investors are significantly high. Of course, things are changing now. And, I would say last couple of years, we've definitely seen more India-centric innovations getting funded, and people believing in the Indian market and models which are very India-centric. But yeah, I think it was very different back then. So.
Absolutely. I think category creation is a problem, is a challenge, I would say, and a lot of companies probably address it in different ways. Now, for the audience, you did your master's in management from Wharton, and then you got into startups, investing, and then you pivoted into your current organization that you are building. This whole journey, did education play a big role in terms of preparing you for taking this path?
So, yes, I think, I mean, if you look at my background, I studied computer science and then I did my master's in computer science, but then I kind of pivoted to finance. So, my first job out of college was with Capital One, where Capital One is still like a pioneer in the subprime lending space in the US, right? And I think that's where I saw how sort of data can be really leveraged for addressing underserved segments of the market as far as credit is concerned. And of course, my educational background in computer science did play a role because, there's a lot of data crunching at that time. We used for big data, which was not a, kind of commonly used term. The technical education I went through was certainly helpful. Post Capital One, I spent couple of years in management consulting, which was really around, thinking first principles and solving kind of, strategic problems for companies. And again, my focus was more on financial services companies. So again, got a very good overview, not just in the US, but also ended up working in Europe and India and Middle East with certain clients, right? And then I think Wharton was again kind of, formalizing a lot of what I was learning, but then getting a more holistic understanding of various aspects of, running a business or an organization, right? And I think the other thing where it helped really is that, Wharton really helped build a right kind of network as well, because folks from business school, I mean, Wharton does have a pretty strong network, whether it's on the venture ecosystem side with a lot of venture capitalists who are Wharton alums, I actually also met my co-founder at Wharton. He was my classmate. So I think overall, I think it's a combination of your education, of course, your professional experiences, the connections which you form, the people you meet, who influence, how you think, how you operate, and all of that kind of comes together, right? Like, so I think.
Correct. I can relate to this because I joined the business school when I had a slightly different story. I failed as an entrepreneur and had to shut down the startup because of lack of funding. And back in those days, in 2010, 2011, the funding ecosystem was not very strong in India. So I
Yeah.
kind of told myself, okay, maybe, I'm not cut out for business, but maybe I don't know the basics. So let me, write an exam, go back to a B school. I joined IIM Bangalore, and the whole ecosystem kind of changed my thinking. You go in with a different aspiration, and then the network, the courses, the ecosystem, the whole environment shapes you up into a very different individual. For me, it was more about finding out what my passion is. Maybe I don't want to get back to entrepreneurship. Maybe I want to do something else. And it was sort of fact finding and self discovery through the Goose School journey. So it works differently for different people. And I'm sure it worked differently for you. So, before we get into what drip does for the audience, let's discuss what is trade financing as a problem, right? Assume I'm a 5-year-old and I'm asking a very basic question: why can't businesses get money from the banks? Why do they have to look for money to fund their whole operations? So tell me, how does trade finance really play a role here?
Yeah, yeah. So I think let me start with a very sort of basic example of how a typical trade transaction works, right? Let's say you are a company, you manufacture garments, right? And you get an order from a buyer, could be a local buyer, could be an overseas buyer. They place the order, and oftentimes you have to put up the capital to buy raw material, pay for employees, takes you 30, 60 days to manufacture the product, right? Then you ship it out. In case of cross border trade, the shipment itself takes 30, 45 days, and then the buyer is probably going to pay you another 30 or 45 days after that, right? So all in all, you're looking at essentially making an investment on day one and getting paid on day 180, right? This is where this creates a massive working capital gap for every business, right? And trade finance really refers to how do you make the financing of these trade transactions easier and accessible. Right? Most businesses will typically, like, their first stop will be their local bank, right? And I think the reason why local banks or most businesses, particularly small businesses, are not able to access the capital easily from these banks is, I would say, primarily because of two things. One is that when it comes to small businesses, the general perception is that these businesses are risky, and hence banks would require collateral in the form of some sort of land, property, machinery for them to be comfortable giving any kind of credit to this small business, right? And many small businesses may have some collateral but may not have as much as is required to fulfill their needs. Second challenge is that banks also require the businesses to have their books in order, showing a certain profitability track record, And I would say the third is that just the way banks operate, it's a fairly decentralized process, but it's extremely paper intensive, time consuming. So even if you apply for a loan with a bank, it may require a multiple back and forths, a lot of paperwork, and many times businesses need capital now because they have an order, they need to process the order, and sometimes the timeline it may take to get that bank approval may just not match with their trade cycle, right? And that's why we see a lot of our customers are either underserved or not served by banks, and that's where we kind of help fill this critical gap.
And if it was such a big opportunity where there's a big gap in the industry, why are banks not doing anything about it? Or why, for that matter, anybody is not doing anything about it? And it became a new category of product or offering.
So I think trade finance as a asset class or as an industry is not new. I think it's been around forever. It's just that when it comes to how banks operate, for a bank, let's say 100 crore customer is the same as a 1 crore customer, or the amount of time effort required to lend or to offer financing to a 100 crore customer is the same it takes to kind of do a small ticket loan, right? And hence their bread and butter is really the corporate segment of the market, right? And when it comes to these small businesses, they don't have offerings which are exactly in line with what the business really needs, right? I mean, if this is a big opportunity, your question on why hasn't anybody else done this? I would say that, technology and data does play a huge role, and I think it's only been the last years where we've seen a lot of digitization of trade or transaction related data, right? Whether it's the implementation of something like a GST in India, your bank statement parsing, where you can actually look at cash flow data, transaction data, and do so in a very automated way, right? So all these are new innovations or digitization of data which has been happening kind of globally, which is opening up opportunities for having a very strong tech first play in being able to offer credit to this segment of the market, right? And I think in general the perception, when you think about small businesses, that they're perceived to be risky, right? And as a result, most institutions or traditional institutions would also kind of approach that segment with that mindset that, hey, this is risky, so I'm going to do everything possible to sort of protect my capital here. But I think that's the challenge, right? How do you sort of identify businesses which are not risky and your capital can really unlock the growth for them, and that's what we've been focused on. So.
Yeah, I think I can believe this to a large extent. I was on a flight a couple of days back to Munich, and I met a spice exporter who was sitting right next to me in the flight, and he mentioned he had a big order from a German retailer, and despite having 15 years of solid business financials, the bank that he was dealing with in Cochin called the order too small and the whole transaction too complex.
Yeah.
So this was like his first cross-border transaction, and he mentioned that it's an impossible choice, right? I had to either reject the order or drain my working capital completely, and I think he got in touch with a trade finance platform, and then he solved the problem, and he was traveling to Munich to talk to some other businesses that would be interested in buying from him. But he said this is a genuine problem, and I kind of had a recall that I'm going to speak to you in a couple of weeks, and I will ask you this question because looks like this is a real problem and not a very easy solution available to it. Now, tell me an example if you have. I'm sure you would have many. Any crazy businesses that you have helped? Like, what were they shipping, and how did you exactly step in, and at what stage of their whole business they came to you for this support?
So I think, lots of stories, but in general, I think what we see is that, many of the businesses we end up working with, and again, we work with businesses across multiple segments. And, there are some kind of crazy businesses as well. I think we've seen, like, one of our customers actually ship live animals, uh, to Libya, I think. But in general, I think, we work with customers across agro commodities, like you mentioned, a spice exporter, or all kinds of agro commodities, processed packaged food products, chemicals, industrials, textiles, a lot of garment export from India. So it's a variety of kind of industry I work with. But typically, what you see is that many of these companies don't have, I mean, while they have the wherewithal and they have orders, or they can grow their business, but they don't have access to adequate amount of timely capital to be able to really scale up their business. And I think the kinds of stories we see, some of the customers who've been with us right from the beginning, right? I mean, their businesses have kind of grown 2-3 folds, right, in the last 5-6-7 years since they've been working with us, right? Now, we have to understand that the access to capital for these kinds of businesses is really restrictive, because you're not like startup where you may actually kind of target VCs to fund your business. So it's largely dependent on either family capital, or you're dependent on some form of debt, right? And when that capital is restrictive, you just don't have the resources to be able to really like grow the business, and that's where I think our solution helps. So
The whole global trade system is a little broken, I would say, at least from what we observe from the sidelines. With the new tariff wars and the restrictions, does it impact your business in any way?
So it does, because I think, at the end of the day, we work with customers in India, in the US, and they are trading, or kind of, dealing with counterparties in 80 to 100 plus countries. Right? So anytime there are macro shifts or these macro policies which impact trade, it does have a kind of direct or indirect bearing on our business, right? But I think in general, what we've seen is that, sort of, markets are efficient. So for example, when trade from a particular kind of geography stops, right? Trade moves to another geography, right? And I think that's kind of what we've seen, historically. So while yes, the short-term impacts are obviously there, and because it's largely because of uncertainty right now, with happening on the on at least even on the India-US tariff, right? We actually don't even know where it's going to settle and eventually what should happen, right? So in such a scenario, what typically happens is that, let's say, US buyers will stop ordering from India temporarily till such time there's more clarity. Indian exporters will stop shipping to US till such clarity, right? So in the short to medium term, volumes do get impacted. But then I think, if this kind of ends up in a scenario where, the tariff rates are just so high that it becomes an unsustainable trade, then, of course, businesses will figure out different sources, right? Like, so US will probably buy less from India, but more from China, more from some other geographies. And as long as you're participating and you're diversifying the kinds of trade routes you're covering, you will see kind of impacts in specific trade routes, also having a potential positive impact in other trade routes where you can perhaps scale up, right? So that's, I think, in our observation, but short term impacts are there because of uncertainty.
Absolutely. I was I do work for a tech company also, and I do some software sales. So we were talking to a big automotive supplier, of course, a large company. And we were talking about some renewals, software renewals, and all. They said, kind of, put this on hold because right now we are focused in shipping our finished products to US and we have a terrible problem solving that. So it's a real tension, and if large businesses are worried about it, I'm sure the next, the bottom of the pyramid also gets impacted to a large extent. Let's shift gears and talk a little bit about your entrepreneurial mind and your journey. Do you ever wake up in the night freaking out, I'm responsible for such a large business, so much money is at stake? Do you have those moments?
Yeah, I think absolutely, but just as the organization scales up, it becomes more robust, perhaps, and it happens less now than how it was maybe a couple of years back. But yeah, I mean, I think that is the journey or life of every entrepreneur, right? I think you're constantly thinking about what that can go wrong, and this whole thing, you have an existential issue, right? But yeah, I think over time I've perhaps learned to live with it. So yeah.
Yeah. And you have a doctor's family and a hospital to take care of you if you ever go into a stress out state. But what does a routine look like? You are a CEO that I'm talking to, kind of having this frank conversation. What we know from the outside is people who lead companies, they're those 4 a.m. meditation guys, having a very strict regime, work on the calendar so well that they have a perfect life. It looks at least like that from the outside. When I talk to startup founders, they have a very different perspective on it. But what does your routine look like as an entrepreneur and somebody who shuttles between countries?
So to be honest, I mean, I usually I'm not a meditation guy. I think that is something I haven't been quite able to get myself into a habit of. Although a lot of people I talk to constantly advise me that meditation is something super helpful, and particularly when you are in a high stress kind of a role, right? I still have to get to it. It's on my to do, I guess. So, but in general, I think hours are quite managed now. I think early days, first 3 4 years, when we didn't have the right people, the right team, and there's lots of things to do. I was also operationally quite involved, doing a lot of things myself. But I think now we have a pretty solid team that the company sort of on a day-to-day basis, at least people are who are taking care of stuff and day to day. I spend deep of my time actually thinking about, are we moving in the right direction? Are we fixing things, or are we putting things in the place which can kind of take care of any existing issues you may still have? Right? To have the right people doing the right role, right? And are they scaling up with the way the organization is scaling up? And then do you need to sort of think about how do you need to reorganize, right? So these are, and then of course the last one is obviously managing and dealing with investors, the board, and so on and so forth, right? So in terms of, and then again, on a weekly basis, I would typically wake up and then, at least I've made it a habit to work out in the morning. So, before I come to the office, usually here by like, let's say 9:30, 10, and then, I try to kind of, leave before the traffic hits. I live in about 45 minutes from the office, and in Bombay it can get really bad. And then I take calls in the evening, if I have any, right? So work hours are managed. I think a lot of it is actually managing your mental energy and how do you yourself motivated and keep yourself energized. So I've realized that it's not really about the hours and actually the time you put in. I think it's a lot about conserving your energy and making sure that decisions you are making are the right ones. These important things which I spoke about, including like whether we are moving in the right direction, we have the right people. So how do you sort of put yourself in a frame of mind that you're best positioned to make these decisions? I think that's how I put it.
Yeah, so decision making, while as a CEO, I'm sure you rely a lot on data to drive decisions. Do you ever trust your gut, or have you taken decisions with your gut and they have paid off and that kind of becomes a pattern?
Yeah, absolutely. A lot of times when it comes to launching a new business line or modifying or starting a new product, you will never have the perfect information. You will have some feed customers, but only when you launch, you will really know the nuances of that particular product or that particular geography. I think hiring is another area where you can look at resume and you can interview the candidate as much as you want, but frankly, I think it's only when you start working with them, you start identifying what they're good or what they're not so good at, and whether it's a good fit or not, right? So in all these cases, your gut does play a role, and as you keep doing this for a while, you just sort of start trusting your instincts a lot more. I think the way I think about it is, what's the worst that can happen, right? And get a decision which you can backtrack from, right? So that, I think, just putting some logical framework around making these decisions helps. And yeah, and I think over time you also figure out that you should trust your gut more.
Correct. Yeah. I think that's what makes us human. Otherwise, businesses could be run by robots. Also, as time passes and the business evolves, I think resilience is a natural foundation that kind of gets baked into the overall operating model. So, uh, decisions taken by gut don't backfire. And even if they do, you still have, the foundation to kind of deal with the after effect and recover from there. But as a leader, you, I'm sure, would have had a lot of tough conversations also, right? It's always not a very rosy, situation. So what's the hardest conversation, you ever had with your team? Because you said you are trying to see whether you are steering the company into the right direction. So of course, it is always not cozy conversations, right?
Yeah, yeah. So I think, one of the instances where I remember having a tough conversation, and it was really hard, was so we actually, when we started in India, then expanded to the US. We also launched in Mexico, and we were very bullish on that geography. We felt it was, the opportunity was large and very similar to India. So I would say in the first 2 years of after launching, we had really scaled that business up. We had about 70, 80 people in Mexico City. And I think in 2021, 22, when, funding kind of really slowed down, right? It was at that point, still a business which had not matured. And we were still dealing with some Mexico specific issues, where the business was not profitable, right? We're losing money. And we decided at that point to completely shut down that business, right? And that was absolutely a tough decision and a tough conversation also, because there were 70, 80 people who had built 3 years in the organization, worked really hard to build that business, but just that the economics of the business were not working out. And I don't think, because we took a strategic call that we had to become profitable and that was the right way to go, it meant that we had to shut down that business and literally like fire every one of them, right? And obviously we did whatever we could to help place them and recommend them. because I don't think there was anything wrong with the team. The team was really solid. It's just that the business model was not really working out the way we thought it will.
I think I have read the story somewhere else also. So I was reading Xerox's when Xerox was under bankruptcy and how they recovered, right? Big enterprise organization. Their then CEO, Anna, she mentioned that the first step she did was the most difficult thing she did in her career was shift from the role that she was playing as a HR head into the role as a CEO. And she did the exact same thing, closing down some of these non profitable businesses, which kind of again helped Xerox revive into an organization that it is today. So completely relate to what you just said. But yes, as a CEO, you have to take these decisions. Now, we understood your current business. We understood what you have been doing, what drives you as a person. What's the future looking like? If you were given unlimited resources, how would you completely redesign global trade?
So I think the business, we spoke about trade finance, which has been the core products which we started with and been scaling that up. Our business has also evolved now. We are actually not just a trade financing platform, but we've also launched a trade commerce vertical where the idea is to help businesses trade with each other. And we do believe that that's also another big problem which businesses have when it comes to finding new buyers or finding new suppliers and getting competitive pricing on either fronts, right? And that's the vertical which we've now launched. And our vision is to really become to some extent a one-stop solution for small businesses as it pertains to trade. Financing is obviously a key problem which we are addressing, and I would say I'm super excited about the commerce vertical also, which we launched about a year back and scaling quite rapidly. So as I think in the future, I think owning the whole transaction end to end and then really leveraging technology and making it seamless, both the transaction flow and the financing around it. That's how I think about the world and what's writing for us. And yeah, we would look at continuing to build our platforms, continuing to sort of expand it to multiple geographies and becoming more of a holistic end-to-end trade financing and facilitation platform.
So basically, a touchless transaction or connecting buyers with the suppliers and owning the whole commercial piece of that whole transaction. That's what you're saying. Does the current AI boom in terms of like, and when I say AI boom, the world of course perceives it as generative AI, but with the recent talks around AI infrastructure, AI models, does it really impact the way you see finance transformation? And are people really paying attention to the right problem statement when it comes to using AI in the trade finance space?
So I think there are absolutely a number of areas where AI can optimize, when it comes to, so I think transactions or trade, oftentimes there's a large amount of documentation which is involved, right? And how do you leverage AI to really kind of streamline that piece is one area. Risk management is a very critical area. Fraud detection and prevention is another very critical area. And a lot of the data resides in these documents, right? So from the point of view of, and then I think on the customer facing side, everything from your customer service or your risk servicing or risk collections, which is an important domain within the financial services, all these areas, I think you absolutely have areas where AI can be leveraged. We've been experimenting in definitely in certain areas. We've had some success, where we are able to massively improve productivity of our agents and so on and so forth. I think as models evolve, as they become better, we'll continue to keep track of where can we, really leverage the latest in AI. And I think given that we are to some extent a fintech focused on this area, and technology is something which is core to us. We want to be the pioneer in really leveraging it within our domain, right? As far as, and that's something which we continue to explore.
And talking about future, I can't let you go without asking, what does success look like for you personally 10, 15 years down the line?
So, see, I think personally to me, it's about if you are able to drive impact, help a lot of businesses, also in the process build an organization where people are proud of being associated with it, and you kind of have a meaningful impact on their career trajectory. I think that's what I would say. See, financial returns for investors, for everybody, all the stakeholders is important, but that's I think the byproduct. As long as you execute well and you kind of focus on the right problems, those things would anyways happen. So yeah, I would say that as long as You keep doing the right thing.
Before we wrap up, Pushkar, what's the one thing if you wish somebody had told you when you started all of this?
Couple of things. One is that, I think if you want to start, I think earlier is better. Of course, experiences help, education obviously helps, but I think a lot of times people spend a lot of years thinking about starting. I mean, if I was to, I could have perhaps started when I was at business school itself. And the earlier you start, the better. And even starting up is the best experience you anyways going to have, right? Like, whether it's failed or a successful startup, it doesn't matter. I would say the second thing is that, perhaps early on we were too anchored with what's a fundable idea, right? That, oh, is this, yes, an idea which can get funded? But, I think over time, we realize that as long as you understand your customer and their pain points well, right, and people are willing to pay for your solution, that's a good idea. At the end of the day, it's all about execution, and funding will come. I think ultimately you need a few people who believe in what you believe, but you can't over optimize. For example, when some of the earlier ideas which we tried out or we were thinking of, I think we would get obsessed about competition. We would say like, oh, there's like four companies which already funded in this space. So then, if we are the fifth one, how will we succeed? But
Correct.
fact is that it really doesn't matter as long as the market is large, and you over time have a unique insight into customers and, are able to build a better product, you would certainly grow. So that I think has been my second maybe learning.
See, category creation is, of course, challenging, which you have done. And then worrying about competition is a very natural instinct most leaders have. Big enterprise companies also worry about competition. But I think competition also gives us a lot of motivation to innovate. Uber was there, Ola was born, and so is a Rapido. So innovation doesn't stop and it keeps coming. And that's what makes life and the overall economy better. So, absolutely in for it. How do people find you, Pushkar, if they want to learn more about you, learn more about the trade finance solution, the trade commerce that you provide? Where do they go?
Personally, they can obviously reach out to me at pushkar@dripcapital.com. That's the best way to reach me. And yeah, and I think if this is a solution which is of interest, certainly they can reach out to us. They can submit an inquiry online. They can reach out to our sales teams. The numbers and contact information is all out there.
Perfect. Thank you so much, Pushkar. This was a great conversation for me, very personally enriching, understanding your business, understanding you as a person, seeing so up close on what drives a successful individual. So, wishing you many more successful milestones at Drip. May this company flourish and maybe see a lot of innovation happening at your end. Wishing you and your team the very best. And we'll keep this conversation on at some other milestone where we meet and we see how Drip has grown over the years.
Sure, sure. No, I thoroughly enjoyed the conversation, and yeah, glad to be joining this call. Thank
Yeah, thank you so much. You have a good evening. Bye bye.